Today I'm going to be explaining everything that you need to know about fair value gaps. We are also going to cover how we can use these gaps as price targets and as ways to enter the market. For more content like this, consider subscribing and like the video so it reaches more traders just like you. When we are talking about a fair value gap, we are essentially referring to a range in price delivery where one side of the market was in clear domination, intense selling pressure, or intense buying pressure. These are clear to see as they stand out. You won't be able to miss them. The fair value gap, or the FVG, consists of 3 candles. It's a 3-candle pattern, as you can see in the diagram below. The gap is actually between the low of candle 1 and the high of candle 3. This is in a bearish scenario. In a bullish scenario, it would be the opposite. It would be the high of candle 1 and the low of candle 3. So let's actually go through what a bullish fair value gap would look like. So we would have some sort of bullish candle here, a green candle. Let's just draw it here. Then we would have this candle is the imbalance candle, okay? At this point of price, wherever it is, price accelerates. This is the imbalance. It goes high and it pushes extremely high. Then a next candle opens here and leaves it here with a wick of something like this. Now, as you can see, this is the gap. This is the fair value gap that we're looking at. It's here and there. The low of candle 3 and the high of candle 1. This is the gap in a bullish scenario and this is the gap in a bearish scenario. We're going to go through some examples of this later in the video. So in this gap, there was no trading basically. In the diagram below, sellers were so powerful that there was no opportunity for buyers or buy side to trade. The result is this gap. Because of this imbalance or displacement, as ICT calls it, in price, we expect price to come back into this gap eventually, which is where we can look for a trading opportunity. Now, when we're looking for trading with the fair value gap, what we're looking for is our entry at the high of when the fair value gap is created, and our stop loss will be on top of candle 1. This gives a protected stop and an enough risk to reward to target. When this fair value gap forms, we would expect price to hang around a bit maybe, and then eventually go up here and then go down like such. So now we have a daily chart on Euro USD or Euro Dollar, and we're just going to show you some fair value gaps. So from here, I'm just going to point out some fair value gaps. Example 1 is right here. Look at this. This is candle 1, this is candle 2, and this is candle 3. Look at this imbalance. This was a low and closed right here. After this, when this candle opened, look at what happened. Boom. Intense selling pressure right here. And then this is the next candle. So this gap is created. So the low of candle 1, high of candle 3. Boom. We tap into it here, go down. But we want this whole thing to be filled, right? This is inefficient price. Price hasn't been delivered efficiently here. So what do we expect? Price to eventually come back up and fill this. This is when it's filled. When it reaches the top end of the fair value gap, it's considered filled. Price is said to have been delivered efficiently. That's one example of a fair value gap. You can see these everywhere. Look at this. This is another example. Boom, boom. If we get our rectangle tool out, high of candle 1, low of candle 3, there we go. What does price do? It comes down and it fills it in. In terms of entries, we can actually see this sort of thing. And a fair value gap created here. This is the fair value gap. If we get our entry tool out, we would enter here. Remember the low of candle 3. Click that there. Our stop loss is below candle 1, which is 1, 2, 3. So this is candle 1. Stop loss there. And you could target, I don't know, 1 to 2, something like that. But this is a daily. We're going to go down to the 5-minute and maybe even lower and show you how you can get better entries and, sniper entries if you want. So this is actually an entry I took, and what we can see here, this is the price action I'm looking at. Let me just highlight it right there, and I'll make it into a, let's go orange. So this is what I'm looking at. So in this price action leading up, can you spot any fair value gaps? Let me show you. We have this one right here, fair value gap. Remember, it can be tiny, but it's still a fair value gap. So I'll just add it there. If I make it bigger, look at this. Let's zoom into price. Get a real zoom. So check this out. High, this candle, look what happened. Only buy side was offered. Shot up and it closed. This was the next candle. It came down and left this small gap. So what do we expect? We expect price to come back and fill this in. It almost filled it in, but guess what? We have more fair value gaps. Another one right here. And this was my entry actually. And I will show you why I entered it in another video, which is going to be a strategy video, and that's going to be really cool, so stick around for that. But it's sort of around, equilibrium, but I'm not going to give too much away. But this was the fair value gap I entered off, and as you know, this is the three candle pattern, 1, 2, 3. So the entry was right there, the low of candle 3, and the stop loss was below candle 1, so 1, 2, 3, 1 below here. And then I was targeting buy side liquidity. If you haven't watched my liquidity module video, check that out in the comments or check it out above in this video right now. That's really good. You'll understand what I'm talking about. But equal highs, buy stops above here, and stop losses there, so you could target that. Easy 1 to 2. As you know, smashes through it, goes even further. All these liquidity pools here, buy side, buy side, buy side, everywhere. So a lot to target. That's just one example of how you could use a fair value gap to enter, and I hope this video was useful to you. Hope you learned something, you got some value out of it, and hopefully you can use this. Let me know down in the comments below if I can improve in any way in teaching, or if you want to see more examples, or if you want to see live trades or anything like that. Make sure to comment it down, and yeah, I will see you guys in the next video.